Hello, and thank you for joining the Center for Financial Security for our webinar, Financial Resources During COVID-19 Crisis, a webinar event for Wisconsin practitioners and educators. My name is Hallie Leinhart, and I am the Assistant Director of the Center for Financial Security here at the University of Wisconsin-Madison. We have a lot of important information to share with everyone today. The webinar will be an hour and a half long today, so ending around noon Central Time. We will be hearing presentations on Wisconsin State Agency program and policy information and updates during the COVID-19 crisis. The order of presentations will be Department of Health Services, Department of Workforce Development, Department of Children and Families, Wisconsin Housing and Economic Development Authority, Department of Financial Institutions, and the Department of Agriculture, Trade, and Consumer Protection. We will then continue with a question and answer session. So please feel free to submit questions in the chat box that's located at the right side of your screen throughout the webinar. Please note that the webinar is being recorded. We will post the recording on our website with the slides within one business day, and we will also send to all people who registered for this event. We will also be preparing a Q&A document that we will post and send out to all registrants as well. This document will seek to answer any questions that we were not able to cover in the presentations or the Q&A session. That document should be posted within a week. I'm very excited to introduce our presenters for today's webinar. Rebecca McAtee is the Director of the Bureau of Enrollment, Policy, and Systems at the Department of Health Services. Secretary Caleb Frostman joins us today. He is the Secretary of the Department of Workforce Development. Janice Peters is the Deputy Division Administrator of the Division of Family and Economic Security at the Department of Children and Families. Scott Phillips is the Manager of Default Management at the Wisconsin Housing and Economic Development Authority. Michael Lawton is Consumer Credit Examiner at the Department of Financial Institutions. And Laura Sutherland is Administrator of the Division of Trade and Consumer Protection at the Department of Agriculture, Trade, and Consumer Protection. Thank you all for being here. And with that, we will get started, and I will turn it over to Rebecca McAtee.
Good morning, everyone. I hope you can hear me okay. You can go ahead and go to the next slide. So as we get started today, just a little bit of who I am and how I represent DHS. So I'm the Director of the Bureau of Enrollment, Policy, and Systems, and this is in the Division of Medicaid Services. My area has oversight of Medicaid and food share eligibility for the state of Wisconsin. The entirety of the food share program is operated within my bureau, and I am the food share director for the state of Wisconsin. And so the items I'm going to be speaking about today are really related to eligibility for our programs and our benefits. And I have a little bit that I'll be sharing today around telemedicine as well, given the audience. But I won't be getting into kind of the public health aspect or overall Medicaid benefits across the board. So the couple of things that I wanted to talk about today are just our guiding principles as we look at our response to the COVID-19 emergency, and then again, the overview of eligibility changes that we are making to ensure that we can meet these guiding principles. Next slide. So overall, we've been evaluating just different state and federal options for our opportunities to respond to the COVID emergency and best support the residents of our state during the pandemic. We have two primary goals that we are operating under within our eligibility area, and those are really to ensure that we are providing coverage for as many people as possible during the pandemic, and then again, to protect the health and safety of Wisconsinites by streamlining eligibility processes for both members and income maintenance agencies. And so we've implemented a large number of different changes, policy options across our programs in order to ensure both of these goals. And so wherever possible, what we are doing is working with our partners in other areas, particularly with DCF, to ensure that programs have similar types of changes that are happening to reduce the amount of confusion for members who may be eligible for multiple programs. And I know my colleague Janice Peters will be talking about some of the things that they have been doing on the DCF side as well. Next slide. So on the healthcare side, specifically, we've been looking at identifying a range of different options that seeks to really expand our ability to provide healthcare coverage. We're not expanding eligibility necessarily, but we are expanding kind of those aspects of our program to allow for more streamlined application processes and reduce really the member burden for individuals. So we've put this into three primary categories. One, streamlining processes. So we have been looking at some different processes to streamline to ensure that people are able to enter our programs in a more streamlined fashion. Some of this we work with our hospitals, in particular on certain different policies called presumptive eligibility policies. And so if you are familiar with that, this is basically a streamlined application process for individuals who appear to be eligible for our healthcare programs, and they can get services without having to apply with a full application for a limited period of time. And so we have looked to expand that to additional populations. And we currently have this in place for children under our CHIP program, and then also for our elderly, blind, and disabled population. And again, this allows individuals who at hospitals and other eligible providers can screen those individuals with a very streamlined application that goes through a high level of questions around that person's eligibility, and those individuals can be deemed presumptively eligible for our programs for a short period of time. Another thing that we're doing on the healthcare side is that we are preventing termination. So under the CARES Act, there is a ability for states to receive enhanced federal funding, but there are stipulations that are tied to that. And in Wisconsin, we are moving forward with getting that enhanced federal funding. And one of the stipulations is that we are not allowed to disenroll anyone who is eligible for our programs from our healthcare programs. And so we have actively put that in place where we will not be terminating anyone who has active healthcare eligibility from our programs for any reason. That means if they go over income, if they have another eligibility change that would normally remove them from our programs, we will not be removing them from the programs except for if they voluntarily withdraw or if they move to another state. And so that ensures that people can receive health care throughout this pandemic without fear of losing their health care for other reasons. Another component with that is that we have pushed out renewal dates. And so anyone that is required to renew their certification, it happens on an annual basis, but we will not be requiring people to renew until a later point in time. And so trying to streamline those processes to not require additional work from members during this pandemic period. Another piece that we're doing is really trying to reduce member burden. And so one of the examples of this is that we have suspended member premiums for Badger Care Plus, for Badger Care Plus childless adults, and then also for MAP households. So none of the families or individuals who we normally charge premiums for are needing to pay premiums during this time. Next slide. So on the food share side specifically, and I know that this is generally a little bit outside of what people hear about with Medicaid services, but we do work with the food share program. There are a lot of changes that we are supporting with the food share program during this time. Some of these have actually happened in the last few weeks, but one of the things that we are looking at, and we are actively implementing right now, is a project that is called Pandemic EBT, and this is in coordination with our Department of Public Instruction and with our Department of Children and Families, and we are looking to get funds out to families whose children would normally receive free and reduced lunches if they were in school. We just received approval of this last week, and we have done our first allotment out to families who are currently active on food share, and that just happened as of this morning. So we are going to be doing more allotments out to additional families, but and there are 3 phases really to this project, but this is going to be pushing about $43 million went through this weekend for families. So a huge amount of money that's going back to families to help pay for food during this pandemic. Again, another area that was approved during the CARES Act is providing additional allotments for food share families. And this is, again, another emergency allotment for all families who are currently active and eligible for food share. We are providing people up to the maximum allotment for their household size. And we have now done 2 different releases of this amount of money that has affected almost 230,000 households across the state of Wisconsin. And so we did a first run of emergency releases on the weekend of April 11th, and then we did a second run this last week. And so that is really providing families a lot of additional funds and a lot of additional money to help support food and nutrition during this time. And then again, for reducing member burden here as well, for those of you who are familiar with the food share program, we are no longer requiring interviews for certain participants. The interview, telephonic interview, is something that is generally required for food share eligibility. But we do have an allowance from the federal government to not require interviews, which will reduce the burden on both our income maintenance workers who process these cases, and then also on members to streamline and hopefully expedite eligibility for our different benefits. Next slide. So in addition to those changes, and I will say that we've done several other changes, but in the 10 minutes I have today, I wouldn't be able to go through all of them. So also just wanted to note that there are other areas that we are looking at. We know that there is additional unemployment compensation. I suspect that this will be discussed from our partners in DWD. There are implications for our programs for this, and that's something that we have been working on with our other state partners. We're looking at other ways to reduce burdens for members, especially food share members, for online purchasing or other innovative practices to help support people in social distancing, but also make sure that they can get the food and the nutrition that they need. And then we're also looking for other flexibilities related to some of our other populations, including our student population, who have a requirement right now that doesn't allow them to be eligible under this very specific situation of a pandemic. And so we are working with our federal partners to try and ensure that we can also have eligibility for food share for those individuals. Next slide. So I did want to touch on telemedicine very quickly. Again, this is outside of my area, but my team did provide some information, knowing that this is probably something that you are all very interested in. There were quite a few changes that were made to telemedicine to allow for practitioners and others to support members during this social distancing period and allow for those services to be billable. Several of these changes will be permanent, and we've identified these here. And then there are some temporary changes that are just happening during the emergency, including some of the technologies that are being allowed, and then some of the different services that are being allowed to be billed for. I believe that this is setting the foundation for looking at kind of an overall telehealth policy within DMS. And so I expect that there will be a lot more communication around just overall telehealth and how telehealth has been working during this pandemic. Next slide. That's it for me.
Great. Well, this is Secretary Flossman with DWD. Appreciate the chance to be on today, and I just thought it might make sense to run through some of the updates and some of the new federal programs that we're onboarding as part of the CARES Act. So we can go to the next slide, and just a brief overview of DWD. I won't spend too much time on this slide, but we have 6 divisions, including the Secretary's office above that. But the main one that's getting the most amount of work during this time with COVID-19 is, of course, unemployment insurance, as was touched on just a bit in the last presentation. But we do everything from employment training, which includes apprenticeships. Equal Rights does housing discrimination, workplace discrimination, operations, just like it sounds. Vocational rehab is helping folks with disabilities find a job, keep a job, or find a better job. And then workers' comp, of course, helps those that are hurt on the job. But with COVID-19, next slide, please. Unemployment insurance has been our main focus. So we just had a call this morning with some senators, and the week before COVID hit, we were at about 25,000 weekly claims, which are the recurring claims every week for the folks that are still unemployed. And for the week ending last week, we had 340,000 weekly claims. So that's about a 6-week ramp up, and I think about a 1,200% increase in the number of weekly claims. So it's been a really intense couple of weeks, and it's interesting just to see the claims continue to come in. We've seen a pretty strong decrease in new claims. However, it's still multiple thousand per day. So one of the programs that was put forward in the CARES Act to help people was pandemic unemployment assistance, which is meant to be like an unemployment insurance program, federally funded for those that wouldn't otherwise qualify for unemployment insurance. So unemployment insurance at the state level is really for those that are attached to an employer and were laid off through no fault of their own. But of course, COVID has affected many populations, including the self-employed, freelancers, independent contractors. And so one of the programs they came up with was Pandemic Unemployment Assistance, also known as PUA, which will fund up to the weekly benefit maximum of $370 in Wisconsin, but a minimum weekly benefit of $163 per week. And so that number is based on 1% of last year's income with that minimum and that maximum. It's going to be federally funded 100% for up to 39 weeks. And it's backdated to early February, and that can run through the end of the year. And then if anyone is eligible for even $1 of unemployment insurance or PUA, they are likely eligible for what is known as FPUC, which is the Federal Pandemic Unemployment Compensation, which is an additional $600 per week. So we just started taking applications for PUA last week on the 21st. These applications are really manually intensive and require a fair level of analysis. I believe in the first week we received about 30,000 claims. So we're hopeful that we can work through those as fast as possible. And then the FPUC benefit for PUA claimants and for traditional unemployment insurance claimants, those payments will be made this week. Based on our initial analysis, it appears as though we will pay, including the back payments to late March, approximately $350 million to Wisconsinites through the FPUC program going through next week. Next slide, please. And so the PUA piece is, it's relatively new for us, but we've built out our programming and our application. But this is a list of, the interesting, nuances of those that, would be eligible for PUA, because it is a different set of qualifying pieces since you're not necessarily attached to an employer. I won't go through all of these here, but these are the main indicators of PUA eligibility for the folks that can be applying. And like I said, this is a very manual process for reviewing these. We're hopeful to work through them quickly. And just a quick note, since COVID hit, we've been working rapidly to improve our IT systems and our telecom systems. Our base benefit system was not adequately modernized coming out of the Great Recession. And so we've been, working to onboard new programs, including federal programs with that. And we've also expanded our telecom capacity. We've, the last 2 weeks, have had about 5 or 6 million phone calls coming to our call center. And so that's been a real challenge, but continue to see progress on that front. Next slide, please. And so this is similar to if someone has a traditional unemployment insurance claim. To help cut down on some of that call volume, folks are able to look in their Claimant Dashboard for updating where they're at, and so that's helpful to hopefully cut down some of that call volume and keep folks apprised of where their claim is. But we'll continue to offer additional FAQs. It's something we tried to do, from the very beginning of this, is provide as thorough of information as possible on our state's unemployment insurance, as well as the new CARES Act provisions, to help folks, answer a lot of the questions they might have without having to call in or have us call them back. But of course, we're happy to do so when we can get in touch with folks. Next slide, please. And so these are, again, not the qualifiers, but the questions that are going to be asked as it relates to pandemic unemployment assistance. And similar type questions, at least in nature or in spirit, to a traditional UI, but different based on the type of employment, being self-employed, an independent contractor, or a freelancer. And so, as I mentioned earlier, this will likely affect the timing of funding, just based on the novelty of the program, but also the analysis required to determine eligibility and the dollar amount that folks might be entitled to. Next slide, please. And like I said, this was opened up last week, Tuesday, and PUA is backdatable to early February, and it's going to be the later of February 8th or whenever someone became out of work. And PUA itself is a 39-week program, up to 39 weeks, whereas FPUC, which is the $600 per week, that is only through the end of July. And so that's a temporary program meant to both assist claimants and also try to stimulate the economy during this challenging time. And so PUA is through the end of the year, whereas FPUC is only through, I believe, July 25th. Next slide, please. And as I mentioned earlier, as we've been talking to constituents, to legislators, to stakeholder groups, we've really tried very hard, and I think we've done a pretty good job of having thorough, clear information on our website. And if anyone on the phone is having to apply, or knows family or friends that haven't yet applied and need to, we would highly encourage folks to apply online, whether it's for UI or for PUA. But we've been able to process as many as 25,000 claims in one day, and 98 or 99% of those are done online. So even if you just have a smartphone with a cell signal, you're able to file online. But whether it's for PUA or for unemployment insurance, we'd encourage folks to start at dwd.wisconsin.gov, and you can do /UI BEN, which is for UI benefits, and then you can also add a / for PUA if that is the program that you're interested in. But the other option, we try to keep our social media pages updated in real time, mostly on Facebook and Twitter, but also LinkedIn and Instagram. We try to keep folks apprised of what's going on and which programs are available when, and including answering some frequently asked questions there. Next slide. And that's it. Thank you very much.
Good morning, everyone. This is Janice Peters with the Department of Children and Families. I really appreciate the opportunity to present today about some of the programmatic changes that we've made at DCF in response to the pandemic that we think will help children and families, low-income children and families in our state. So I'm going to go over some of the programmatic changes. I'll take the next slide. So in the Division of Family and Economic Security, which is the division I'm in, there are two bureaus, the Bureau of Child Support and the Bureau of Working Families. Today I'm going to talk about programs in the Bureau of Working Families specifically. I'll be talking about Wisconsin Works, which is a cash assistance, case management, and employment services program for low-income parents. Emergency assistance provides a one-time payment to address housing or energy crisis. We have a job access loan program, which provides no-interest loans to assist with obtaining or maintaining employment. We have two subsidized employment programs, Transitional Jobs and Transform Milwaukee. We provide services to refugees who've newly arrived in our country, and we oversee the Community Services Block Grant Program, which is distributed to community action agencies to provide services to low-income individuals and families. Next slide. DFES made a number of changes in response to COVID to our primary programs, W-2, Job Access Loans, and Emergency Assistance, and the Refugee Program. And as Rebecca McAtee, my colleague from DHS, mentioned, we've worked very closely with them to try and streamline and coordinate the changes that we've made. Our programs in DCF, Bureau of Working Families, are case management-based programs. So there's lots of face-to-face requirements for meetings and employability planning so that connections can be established between the case managers and the participants. During this time, however, we have suspended in-person signature and meeting requirements and are allowing a lot of work that's normally done face-to-face to be done over the phone. There's also, as I said, requirements that signatures be witnessed, and we have suspended those requirements, and we are accepting alternative signatures, telephonic and other. Many of the agencies are using DocuSign and some other technology that we haven't used in the past, but may certainly consider using in the future. We have requirements to verify information that people provide that assist us in helping determine whether they are eligible. Our programs have income limits and asset limits, and so we have requirements that they provide documentation to us so that workers can verify the information. And we recognize at this time it may be difficult to get some of that verification. So we are accepting the best available information that the participant can get in order to help the worker determine their eligibility. We are for W-2 job access loans and emergency assistance and refugee programs, although the refugees are likely not eligible. We are disregarding the federal stimulus payment, the individual $1,200 and the couple $2,400 from the asset test that we have for our programs. We also, not included on the slide, it's very late development, are disregarding the $600 federal payment that Secretary Frostman just referred to. We have extended deadlines and timeframes to make sure that people have time to get information in, or like an eligibility review, which I think Rebecca mentioned. We are not requiring those be done at this time. We're extending the deadlines out for those. And then very exciting, effective today, actually this weekend, we added the ability to initiate an application for W-2 emergency assistance and job access loans to access.gov. And I saw an email this morning indicating that we already have quite a few applications in the queue. So that was definitely something that was needed, and we're happy that it's in place. Next slide. We provide oversight of the Refugee Cash and Medical Assistance Program. Both Refugee Cash and Medical Assistance are available to a newly arrived refugee for the first 8 months that they are here. The 8-month clock starts the day they arrive in the country, and it's been a hard deadline as far as the 18 months. So once they hit the 8 months, they're no longer eligible for any cash assistance. But the Federal Office of Refugee Resettlement just issued guidance that will allow states to request a waiver to extend the number of months a person is eligible for both programs to up to 18 months, and Wisconsin has submitted that waiver. Next slide. As I mentioned earlier, we oversee the Community Services Block Grant Program. Though that program is administered through the local community action agencies, and it's very flexible funding. It's just one source of funding that our community action agencies have, but they're able to provide a lot of different types of services as long as it falls into one of these core domains, and is focused on serving low-income populations in their area based on a community assessment that each of them is required to do. So I'm not going to read through the list, but you can see the core domains there. Next slide. The CARES Act provides $1 billion to increase CSBG funds to states, and Wisconsin anticipates that our share will be a little over $12 million. For perspective, our annual allocation usually is around a little over $8 million. So this is a large influx of funding for the community action agencies to assist low-income families in their areas. The funds are to be used to prevent, prepare for, and respond to the outbreak. We haven't gotten a lot of guidance from the federal government on this money, but we anticipate that soon. The funding may also be carried over for the next 2 fiscal years. Normally, we need to spend the money within the fiscal year that it was allocated, but this money will be available longer than that. And it also provides states to increase the eligibility limit for those who are applying from 125% of the federal poverty level to 200%. Next slide. Oh, can you go back? Thank you. Oh. The Division of Early Care and Education is also in the Department of Children and Families, and there are 2 programs. They oversee a number of programs, but there are 2 programs where they've made some specific changes in response to COVID-19. The first is Wisconsin Shares, which is our child care subsidy program, and the second has to do with child care regulation, specifically for child care licensing and certification. So next slide. So Wisconsin Shares also worked with the Bureau of Working Families and our partners at DHS to modify policy where they could so that more families could access the programs, and it would be streamlined, just as Rebecca talked about. They too extended the renewal of eligibility, and they also extended child care authorizations for all families who were in the Wisconsin Shares program. So anyone whose child care authorization was due to end and needed to be renewed, it was extended. Many child care providers are closed for a variety of reasons, but DECE is continuing to ensure that if a parent had unspent funding on their My Wisconsin EBT card to pay for their child care, that money would actually go to the child care provider, whether they're open or closed, to try to make sure that funding is continuing to go to those child care providers during this difficult time. Next slide. In child care regulation, there's been a large effort at our department to try to match essential workers with available child care. There is a provision that is allowing emergency child care centers to open in order to care for the children of essential workers, and also some child care licensing and certification rules have been suspended. Next slide. At the end of March, we put together a proposal that would have allocated $100 million in temporary assistance for needy families surplus to help us expand some of our programs, W-2, emergency assistance, Wisconsin Shares, et cetera, so that more families could access these critical services. The proposal also included $25 million in GPR to launch a new child care grant program to fund hazard pay for early childhood educators and cover the cost of essential workers. DCF may be able to launch that child care grant program. The legislature did include in their bill access to $51 million of child care development block grant funding from the Federal CARES Act. So we are working on that right now. And the next slide. Unfortunately, we are not going to be able to use any of the TANF surplus to expand W-2, job access loans, emergency assistance. We had proposed creating a short-term financial assistance program for people who aren't eligible for those other programs, but we aren't going to be able to do that, nor will we be able to expand shares eligibility or use money from CCDBG for other child care related efforts. So next slide. So with that, I will turn it over to my colleague from WEDA.
Hi, my name is Scott Phillips. I am the default manager at Wisconsin Housing and Economic Development Authority. That's WEDA for short. So I manage the default area. What does that do? What does that mean? So our mission at WEDA is to put residents of Wisconsin into affordable housing. My department is to try to keep them in that affordable housing until they are able to pay off that mortgage. The next slide. So what is WEDA doing to help single-family mortgage customers in the state of Wisconsin? First of all, we want to make sure WEDA is open for business. There's been some misinformation out there. We work with lending partners at your local banks and credit unions, and there's it's a difficult time. People don't realize that they can still get a mortgage. We are open for business. We want everyone to know we're in the process, and anyone that's in the process of purchasing a new home or obtaining financing, WEDA financing is still that option. So please encourage residents of Wisconsin to continue working with their originating lender, their realtor, to continue that home buying process. WEDA has retained an essential workforce at our Madison office to support the financing efforts and to assure our commitment to affordable housing and economic development continues. We have had to implement work from home capabilities, though, wherever possible, and we've put strict protocols in place to protect confidential borrower information because we are receiving a lot of financial documents. Our core team in the office, though, is there to handle the essential functions such as incoming mail, processing of loan payments, and original financial documents that need to be reviewed to ensure funding of loans can continue. Our core team members that are in the office are practicing social distancing to provide uninterrupted service. For homeowners that already have a mortgage, which is who I'm working with, it's unbelievable how many borrowers we have that are calling in for the first time ever. They've never been late on a mortgage payment and they're scared. So we're here to reassure them. We have plans in place. We've always had plans in place to help any borrower that has a hardship. Right now, it just so happens everyone's got a hardship. The Great Recession, it was a 2-year period where it was a gradual increase in unemployment numbers and the amount of borrowers we needed to help. All of a sudden, we went from 6 loans in forbearance to 372 in less than a month. So it's crazy, but we're able to help out and do what we can. So what are we doing? We have to encourage communication. Communication is key. So we must make telephone contact attempts with borrowers if their mortgage is delinquent. That's just part of the regulations. all the investors, Fannie Mae, Freddie Mac, VA, FHA, they require us to reach out to borrowers as soon as they miss a loan payment. So we're just encouraging communication because help is there as long as we can speak to our borrowers. So we're also required to send notices and letters to borrowers. Those are an automated process that we have, that we make sure everyone is receiving information. So we've added our COVID-19 website to all of our letters, our email notices that go out, directing them to our FAQs on our website. So borrowers who have loans with other institutions other than WEDA, I oftentimes will get calls from those borrowers because they're running into roadblocks. So one thing I always make sure I tell them is you need to initiate that conversation with your mortgage servicer. And if you're not getting anywhere with that mortgage servicer, I oftentimes will recommend that they reach out to a HUD-approved counselor, HUD.gov. You can go directly to their website. It pops up a map. You can click on a map and bring up your city and find a HUD-approved counselor that's free, absolutely free. And if you would like, you can actually approve that, give authorization to that HUD-approved counselor to work directly with your servicer. So I encourage that. Let's see. One thing I want to make sure that everyone remembers is that help is always free. One thing we've noticed, and it always happens when a time of crisis or a hardship comes up, something like this, that's when scammers seize that opportunity to prey on consumers. So unfortunately, foreclosure scams are a huge problem that could cost borrowers thousands of dollars or even their home. They make promises they can't keep. They want to charge you a fee to save your home or lower your mortgage payments, even claiming that they have direct contact with your servicer. That is just not true. The only one that can provide that authorization to speak to your servicer is you. So we encourage communication. So during this pandemic, it is extremely important that we identify the impact to the borrower. It's important to understand how that homeowner has been impacted. So we have probing questions that we ask. Fannie Mae even put out a nice script that servicers can use to ask probing questions to find out who has been impacted by this COVID-19 virus. It can be direct impact, indirect contact, impact. We just need to know what. Because that, the direct impact could be, your business closed and that led to lower hours, less pay, or even full unemployment. Additional medical expenses could have happened that impact your ability to pay your mortgage. There's indirect impacts such as, your spouse or a family member has experienced a hardship. Schools are closed. Parents may need to stay home with their kids, which indirectly impacts their income. We can go to the next slide. So what resources are available to homeowners concerned about foreclosure? One thing we immediately, Wisconsin Emergency Order 15, which took place March 27th, that temporarily bans evictions and foreclosures for 60 days. So right there, there was a borrower that was, in trouble. We're giving them another 60 days to figure it out, get a hold of us. There are options that we have in place to help them out. This is good that we have that extra 60 days. And what WEDA has done also on our own, we've temporarily suspended late fee assessments. We started to suspend the late fees in March and April and more than likely May. So what happens is as soon as your mortgage payments due on the 1st, if it's not in by the 16th, which is everyone's grace period, a late fee is assessed. Well, we stopped that. So it gives them till the end of the month to get that payment before it could impact their credit. Let's see. Okay, so the reasons it's important to understand if they're impacted by COVID-19. That's the Coronavirus Aid, Relief, and Economic Security Act that was passed, CARES Act. So we are able to implement a few more safeguards if they've been impacted by COVID-19. That's why we ask those probing questions to find out, were you unemployed because of COVID-19? Because there are some options out there that are going to be available to those impacted by COVID-19 that wouldn't be available to those that were maybe unemployed prior to March. So we have to understand, because our investors, there's guidelines in place. You know, there's some great programs that they put together for those people that have been impacted by COVID-19. So the one thing we're doing right now as part of COVID-19 response in the CARES Act is forbearance. That's when a mortgage servicer allows the borrower to pause or reduce payments for a limited period of time. The terms of the forbearance are really determined on a case-by-case basis. For example, maybe only one borrower has been impacted and the family can afford a half payment. Maybe they've been able to, with DWD unemployment, they're able to collect on that and they can make half a payment. Maybe they can even make a whole payment, maybe just not the escrow portion. So we're working with them. Every instance is a different case-by-case basis. Or maybe a family had a business and everyone in the family has been impacted and there's no income. So we may have to put them on a $0 payment forbearance. So maybe for 6 months, they don't have to make a payment. So the purpose of the forbearance plan is really just to allow homeowners time to get back on their feet financially without worrying about that threat of foreclosure. Because normally the threat of foreclosure, as soon as you're 4 payments delinquent, that's when you're referred to foreclosure. Well, if we can forbear this 6 months, you don't have to worry about that. But it's important that borrowers understand what a forbearance is, and it doesn't erase the amount that they owed. They do have to repay that missed payment or missed payments or reduced payments at some point in the future. So if they're able to keep up with their payments, borrowers should keep making them. That's why it's a case-by-case basis. The length of the forbearance provided by the CARES Act is 6 months for initial forbearance. And then if after 6 months they're not back to work, or they have not, their hardship has not been completed, then we can add an additional 6 months. So they can go out 12 months. Hopefully this doesn't last that long. But to get that forbearance, it's very important that the borrower reaches out to their servicer. They have to communicate. That's why communication is so key. Prior to COVID-19, to get a forbearance, you would have probably had to submit financial documentation. You would have probably had to submit proof that you were unemployed. Well, with COVID-19 and the CARES Act, we are able to accept a forbearance agreement verbally. We don't have to get borrower response packages completed by the borrower and filling out all this paperwork to get that forbearance. We're working with them. We're putting them directly on a forbearance verbally, which is nice. That's allowed us to do the 372 forbearance plans in such a short period of time. Another thing with the CARES Act is related to credit reporting. So people ask, all right, if I'm putting on a forbearance, what happens to my credit? Well, under the CARES Act, this is also really nice benefit. If they're performing under that forbearance, let's say if they were supposed to make half a payment and they made it, they are actually going to report as current. If they're on a 0 payment forbearance, they're going to report current during the term of that forbearance. Let's see. Go to the next slide. So Now you're probably wondering, all right, what happens at the end of the forbearance? The forbearance is really the easy part for us and the borrower. It's like, all right, I don't owe payments for 6 months. Great, my credit won't be impacted. This is where we need this COVID-19 pandemic to end so that we can move forward and bring the accounts that are in forbearance current. That's the hard part. So at least 30 days prior to the end of their forbearance, we're going to reach back out to them to determine, are you back to work? Can you afford your monthly payment? Was it just a blip on the, on the radar and you're able to get back to normal? So important that we reach out to them, they reach out to us, and we figure out, okay, this is our plan going forward to bring your account current. So options are a little different based on the loan type. FHA, Fannie Mae, Freddie Mac options do vary. So that's why it's very important that we communicate on a case-by-case basis with borrowers, because we have to understand what type of loan they have and then what options are available. So just to kind of give you an idea what those options are, like Fannie Mae is the bulk of our loans and our lending is Fannie Mae loans. So I'll go through some of those programs. So let's assume that the borrower is back to work. They're making even a little bit more because they have to catch up because of the layoff, and they can afford a repayment plan. Let's say they were only out of work for a month or two, and if they can afford to continue making their payment and catch up on what they missed, we would set them up on a repayment plan. We realize that's not going to be possible if this pandemic continues and they become more than 2 payments delinquent. That's when COVID-19 impact is also important to realize, because Fannie Mae put together a couple programs for those borrowers that are impacted by COVID-19. One is a payment deferral program, which won't be available until July 1. It was created by Fannie Mae prior to COVID-19. It just so happened it's going to be a huge program. Luckily, they were working on it, and it's going to be ready to go. Basically, what that does is take the past due payments and defers them to the end of the loan into a 0% balance, and it won't be payable until the borrower moves out of the home, refinances, or sells. There is 3 different types of modification programs that Fannie Mae has. It kind of all depends on what the borrower can afford once they're back to work, because some of them are advancing, and capitalizing the principal and interest that they missed, and then they have to make sure they can afford their escrow portion. So anything that was advanced to pay taxes and insurance, they would have to be able to afford to pay that. If they can't, we can then look at the next step in the waterfall with Fannie Mae and do a cap and extend modification. That's where it takes the whole principal, interest, taxes, and insurance and capitalizes it and extends it out over however many months they miss payments. So let's say they were out of work 5 months. We can extend their mortgage 5 months and re-amortize their loan and get it all caught up that way. There are going to be people that go back to work and are not making as much as they do now, and they can't afford the payment that they had when this whole pandemic started. That's when we have to go into the modification program that is currently available for anyone that has a reduction in pay. So that would re-amortize their loan and take their 30-year loan and make it a 40-year loan to bring that hopefully 20% payment reduction into play, and then makes it a more affordable payment going forward. The other program we have is FHA. So I really like what FHA did. They made it very simple for us. Basically, it's a partial claim. So what is a partial claim? So let's say you're out of work for 5 months, you're back to work, and you're back to making what you were making before COVID-19. It's going to take those 5 payments put them into a 0% loan payable to HUD and bring your loan current. So that's an awesome program. So I'm very happy that they put that together. So what is weda doing to advocate for homeowners? So we are constantly working with, our Council of State Housing Agencies. That's basically our lobbying group out in Washington for the other HFAs. We're always looking to, add additional support for homeowners. We're also working with FHFA, Fannie Mae, and Freddie Mac to roll back some changes that they had put in place prior to COVID-19 that really impacted our ability to lend to borrowers in our state. Right now, they limited it to you get a better rate if you're 80% or less of area median income. Once you're over 80%, we lost that ability to give a discounted rate. So we're still trying to work with them on that. And then we're always seeking additional funding for mortgage payment assistance. Next slide. So I think I mentioned this in the beginning. We include our COVID-19 FAQs on our website. We have a dedicated page. It goes to some FAQs for borrowers and lenders out there who have questions. Then we also have a link to FHA and Fannie Mae's COVID-19 assistance FAQs. They have some really great information out there. So I think that's the last slide.
Great. Well, thank you very much. This is Mike Lawton with the Wisconsin Department of Financial Institutions. Go ahead and move to the next slide, please, Kelly. I am a consumer credit examiner. We examine and regulate consumer credit transactions in the state of Wisconsin. The information on my contact there includes the 2 phone numbers that consumers can call for questions if they have a complaint they want to discuss before filing. Or in this time too, we are all working remotely like everyone else. So unfortunately, those 2 numbers are not being manned right now, but consumers are able to leave a message and we call them back within 24 hours. So consumers who are having questions with their loan companies, with their state charter banks, we're the agency that can answer their questions. And if a complaint form is warranted, follow up on their behalf. Go ahead to the next slide, Allie. Under our department, as I indicated, we oversee the state chartered financial institutions. So when consumers have questions, I won't go into the banks, the credit unions, loan companies, car dealers, when it comes to their financing, we're the agency that can assist to answer questions. And again, if a complaint should occur, we are the ones that they would go through for assistance for us to take a look at the complaint, review the documents, make sure everything was done in accordance with the Wisconsin Consumer Act. Go ahead to the next slide. One of the things with the COVID crisis occurring, unlike some of the other agencies that have the aid and the assistance, we don't have necessarily those programs. One of the things that we were able to do is to put some of our licensees on notice with some of the guidance that we've issued. One of our guidance that has caught a lot of attention nationwide is one that we put towards debt collectors, which extends beyond just the collection agencies that you commonly see, but any consumer credit debt collector that has been contacting consumers. And with this current time frame that we're seeing with so many filings of unemployment and people, losing their jobs and reduced income, we wanted to make sure that we put our collectors on notice that what may have been considered acceptable collection practices in the past, under these new climate that we're under, may no longer be considered acceptable. Collection practices are very fluid, and what may be considered harassment in one case may not be in another. but we wanted to be sure that we were putting them on notice that we're watching how they conduct their business. We've also issued guidance to our loan companies and payday lenders, ensuring that they are not increasing rates in this time where their services may be needed. Banks and credit unions, mortgage companies, we're also, again, encouraging them to work with their consumers in this time and make sure, again, that they're not taking advantage of consumers who, again, through no fault of their own, just a few months ago, were obtaining loans and credit with the understanding that they'd be able to make their current installments. However, 2 months later, with the COVID crisis and the stay-at-home order, are no longer able to make those payments. Go ahead, Hallie, for the next slide, please. One thing that I thought I would address that we've seen at DFI with our licensees, we have not seen an extremely high number of complaints, but we do see some where consumers are having some assistance or trouble with getting assistance from our loan companies or credit unions with the loss of income that they've had. We have not seen very many scams at this point. We have been fortunate in that regard. However, I do know there have been plenty out there. Laura may touch on some of what she's seen. But one thing that we have seen in a positive light from our licensees, some of their changes that they've made to assist consumers. Many lenders we've seen have started to waive late fees and return check fees for their current borrowers. Many have suspended reporting negative information to credit bureaus. Many have offered deferrals for existing accounts, or if not deferrals, reduced payments. Many have suspended all collection calls that they would otherwise have made. They'll accept consumer calls. And similar, if I can piggyback on what Scott said, we always encourage, even in this time, to make sure that our consumers are reaching out to their borrowers first to try to work out some type of arrangement or settlement with what they have. And again, if they have trouble, they can file complaints with us and we can try to assist them with what they're looking to obtain. Many companies have suspended repossession activities. And we've seen some, companies where they will cap interest on these deferral times too, to make sure we're not seeing a circle of debt where consumers are just put in a situation where they cannot get out from under. So again, I guess I would like to reiterate that if consumers are looking to file complaints or need our assistance to look at what's happening, they can go to the website that was referenced in one of the earlier slides. They can call us at the numbers around there, and we will do our best to answer questions and handle complaints that are filed. So with that, as my last slide, I will turn it over to Laura.
Hi, good morning, everyone. I'm Laura Sutherland. I'm the administrator for the Division of Trade and Consumer Protection at DADCAP. And DADCAP very much appreciates being able to partner with the Center for Financial Security to bring you this seminar on COVID-related issues and resources. So thanks for you all for being here today. Next slide, please. So I'm going to start first by saying who we are. The Bureau of Consumer Protection is the state's consumer protection agency. Our mission is to ensure fair business practices for buyers and sellers alike by prohibiting fraud, deception, and unfair business practices in the marketplace. And our Bureau is broken into 3 separate units. It has a consumer hotline where we're fielding complaints and inquiries from consumers. And as you can imagine, during this crisis, we've fielded quite a number. We have a mediation unit where we attempt to resolve those issues between consumers and businesses. And then we have an investigation unit where we investigate consumer protection violations. Those investigations can lead to enforcement by referring matters to district attorneys, the Wisconsin Department of Justice, or the agency can resolve matters in-house through a negotiated consent judgment or settlements. Another key component to the Bureau's charge is education. We host trainings all over the state related to a number of issues: landlord-tenant, ID theft, any manner of consumer protection scams. During this crisis, we've been partnering with the FTC, the BBB, the AARP, doing COVID-related scam seminars or webinars, and would be happy to do that for your organizations and the people with whom you work. All these endeavors help us create policy on new and emerging consumer protection issues through rulemaking, and which I'll talk about some today, and advising our legislature on consumer-related lawmaking. Next slide. So one thing we know from health emergencies and natural disasters is that scammers follow the headlines. They take advantage of what may be occurring in the news to find new ways to get consumers to part with their money and their personal financial information. And the current coronavirus, unfortunately, is no exception to that. We saw pretty quickly that scammers were getting to use this health crisis to play on consumers' fears and perpetrate a whole slew of both old and new scams. DAGCAP is very interested in hearing from you and your staff and the people that you serve about the types of COVID-related scams you're encountering in the marketplace. By sharing what you're seeing in your community, you can help us alert the public and thereby help everyone else spot and avoid scams. So when you see a scam or the people that you are working with see scams, please have them report them to datcp.wi.gov. Reporting is very important. Even if you just encounter a scam and you recognize that it is a scam and you don't fall victim, reporting in that instance can help us prevent others from falling victim. And we always say that reported fraud is just the tip of the iceberg of the actual fraud that's occurring in the marketplace. So we know the issue is much larger than the complaints we receive. Next slide. So some of the scams that we're seeing during this crisis in Wisconsin and nationally, I'd like to touch on some of those. First and foremost, there are the fake treatment and cure scams, everything from miracle cures to vaccines to at-home testing kits to targeting people on Medicare. In Dane County, there were reports of individuals impersonating healthcare inspectors. We're concerned about, we're hearing reports around the country about impersonating tracers and working on ways to educate the community about that. So essentially, we are telling folks, obviously, to ignore online and telephone offers for vaccines, tests, or cures. There are no vaccines, as we know, and if you hear of any from anything other than the CDC or WHO, it is a scam. Certainly, if it pops up in your email or your social media, it is a scam. And if you're on Medicare, we're hearing reports of people getting calls, emails, seeing ads that they will give you special access as a Medicare recipient to kits or testing. Obviously, this is also a scam. Medicare representatives will never call with special offers and special access for tests or treatment, and anyone who purports to do that is definitely a scammer. So we're encouraging folks to use trusted sources of information for all inquiries. The Wisconsin government has an excellent website, wisconsin.gov/COVID-19, that has information about unemployment, education, small business loans, and everything else that the Wisconsin government is doing right now. And then obviously going to the CDC and WHO for information about the virus itself is where folks should go. Next slide, please. The most common scam that we're seeing right now is the phishing scam. Scammers sending emails and text messages to get your personal identifying information, your money, and to try to load malware onto your computer. We've seen scammers have bought up a lot of domain names for coronavirus, usually having misspellings. But if you visit one of those sites, it will definitely put malware on your device. So we're encouraging people, obviously, not to click on links or text messages from sources they don't know, and rely on sources that you do know. I'm going to provide you a couple or a single example of some of the phishing emails we've seen. Next slide, please. So this email has all the telltale signs of a scam. It purports to come from an entity we trust, the CDC. It preys on fears, telling you about cases in your area. It creates a sense of urgency, and it purports to have information to keep you safe and healthy. Oftentimes these scams have poor grammar in them. This is actually a phishing email that was distributed to a state agency. So no one is obviously immune, if you will, from these types of scams. The CDC is not going to be sending emails to you about the viruses in your area. Next slide. The other enormous uptick in scams we're seeing is with robocalls. Robocalls related to all of the issues that we just discussed: fake cures, prevention solution, test kits. We're seeing robocalls related to Medicare recipients, healthcare insurance, cleaning supplies, student loans. There is one particular one going out now related to the Social Security Administration, referencing the coronavirus, telling consumers that their Social Security number has been suspended due to suspicious activity related to the coronavirus. These scams sound like they're very easy to determine, but they're not. Many people in our community fall for them regularly. So we encourage you to continue to talk about what these scams look like so people can avoid them. And when you do get these calls, or you hang up and you report them to DADCAP so we can alert communities where these scams are occurring. Oftentimes they occur in particular geographic areas, like the Social Security scam and the Medicare scam, so we can get out in front of that, get to radio stations, news outlets, and talk about those scams. Next slide, please. The other obvious target for scams, it relates to the CARES Act and the stimulus check money that's coming from the CARES Act. We are seeing criminals use this type of headline to make phony pitches and sound more credible. As many of you probably know on the phone, if someone calls you or emails you out of the blue that there's money available from the government and you need to make an upfront payment, that's how they typically ask you to do this, or they ask you for your personal identifying information. That's how these scams work. Obviously, the government is not going to ask you to pay to get your stimulus check, nor are they going to ask you for your Social Security number, your bank number, or anything like that. These scams are very common, and anytime there's a federal or state or government program, you'll see copycat scams where people are trying to steal the money and steal your personal identifying information. The IRS has an excellent website, irs.gov/COVID-19, that talks about all the ways in which you can get this money. The vast majority of people need to do nothing in order to get it, and many of them have already gotten it. So we encourage you to go visit that website to find out information about the stimulus checks and how to avoid being scammed. Next slide, please. So this is what I've already touched on, but basically we're telling folks that the best way to avoid these scams is to know who you're dealing with. Go to sources of information you trust, the government, the CDC, if you are emailed something from somebody, even if you think you know them, don't respond to those emails, don't click on links, don't respond to those phone calls, hang up, and initiate the contact with the contact information that you know and trust. Obviously, don't share your personal identifying information with anybody that you are not sure who they are, and treat that information, your Social Security number, your insurance information, your driver's license, like it's cash, and guard it like it's real money. And obviously, don't pay for anything with gift cards. All of these scams, when they solicit money, they require payment with a gift card. It sounds unusual that people fall for it, but they do. Telling people regularly that the government will not take payment in a form of a gift card is very important. So next slide. So I want to talk about a couple of executive orders that have been issued with respect to landlord-tenant. There have been a number of temporary changes to the landlord-tenant regulations during the last few weeks. In late March, the governor issued an emergency order placing a moratorium on residential and commercial evictions for non-payment of rent. There's also been an emergency order related to right to enter a property, as well as an emergency rulemaking related to residential late fees. Next slide. So with respect to emergency order number 15, that was issued on Friday, March 27th, placing a suspension or moratorium on residential and commercial evictions for non-payment of rent. The order does a couple of important things. Landlords are not permitted to evict a tenant for 60 days. That period will end on May 26th. During this time, no evictions can take place unless there's an imminent threat of physical harm. Otherwise, tenants cannot be evicted for the non-payment of rent. This order obviously does not mean tenants shouldn't cease paying rent. While many tenants are experiencing obviously extreme economic hardship during these times, tenants should pay rent if they can, and we encourage landlords to work with their tenants to find manageable rent payments during the crisis. Next slide. Oh, I'm sorry. Actually, can you go back to that slide? I have a couple more thoughts to say. My apologies. So eviction proceedings that started prior to March 27th, the sheriffs are prohibited from acting on those orders. So even eviction proceedings that predated the date of the order cannot proceed because sheriffs cannot serve certification on those eviction orders. During this time period, unless the eviction is for imminent threat, landlords are prohibited from evicting or are prohibited from serving notice of terminating rent agreement, commencing a civil action, or delivering eviction notices to sheriffs. Okay, next slide now. Thank you. An additional order was issued on Tuesday, March 24th, related to the Safer at Home order. And it deals with landlords and entering rental properties. They are not permitted to do so unless there's emergency maintenance is required. So no other basis on which can they enter into rental properties. Next slide. Now on Saturday, April 25th, the department published an emergency rule, 134098D, governing fees related to late payments of rent. This emergency rule was posted this past Saturday, but it's retroactively enforced, so it's been enforced since April 25th. It prohibits fees for non-payment or late payment of rent during the emergency order for 90 days following the executive order. This rule will have a public hearing on May 21st and will also accept public comment in writing until the close of the business that same day, also May 21st. But it is now enforced. Next slide. The last order I wanted to talk about was one having to do with price gouging. Executive Order 72. The main complaint DADCAP has been getting during the crisis is related to price gouging, and there's a great deal of confusion about what price gouging is and what it isn't, so I'd like to take a little bit of time to address that. On March 12th, the governor issued an order declaring abnormal economic disruption. This triggered the law for the first time in Wisconsin. Prior to that date, the price gouging law had never been utilized in this state. So from March 12th forward, any consumer good or service could not be priced at 15% higher than the seller's highest price within the last 60 days before the declared emergency. There are significant exceptions to this rule, one of which is that the seller can pass on increased costs to the point of sale. So as you can imagine, there are significant strains on the supply chains right now that are increasing costs, and much of the price increases that we're seeing are not price gouging. They're a result of strains on the supply chain. Next slide. This law covers all consumer goods and services. However, the main complaints we're seeing deals with cleaning supplies, toilet paper, masks, certain food staples such as milk, eggs, and meat. We're also seeing a fair amount of online sellers who are stockpiling these items and selling them for higher prices. The law covers the entire state, and it covers the entire supply chain. So manufacturers, producers, suppliers, wholesalers, distributors, and retailers. The agency has set up an electronic complaint form, especially designed for price gouging. We encourage people to go visit our website, look at the FAQs, and file a complaint where appropriate. We also encourage you, when filing a complaint, that you fill in all of the information in order for us to be able to act on the complaint. We also recently had a scope statement approved for the emergency rule, and we are now taking public comment on the emergency rule for price gouging, and we'll be taking public comment for the next week prior to drafting that emergency rule. Next slide. So the last thing I want to say is to stay informed and have your those that you work with stay informed and go to trustworthy resources for information. You can keep up to date on the latest information about what Wisconsin is doing at wisconsin.gov/coronavirus. And as I mentioned earlier, please report any scams you're seeing to DADCAP and to the people in your, so we can further alert them to the people in your community. Last slide. You can also visit our hotline and our website, and we have FAQs from the governor's eviction moratorium, price gouging, and other resources about COVID. And you can follow us on Twitter and Facebook. Thanks very much for your attention today. I appreciate it.
And I would like to thank everyone for your presentations. And we do have a bit of time left for some questions. I do want to remind the audience that if we don't get to all the questions, I will be developing a Q&A document that we will post on our website with this recording, as well as the slides from this webinar within the slides and webinar within 1 business day, and the Q&A document within about a week. I have a question that I'm going to pose to Secretary Frostman if he is still on the line. I'll go ahead and read it out, but if the Secretary has had to drop off, I do understand. And this has to do with that kind of additional $600 that people are getting along with their typical unemployment insurance payments, and whether or not it is typical that people choose to have taxes withheld on a weekly basis. Do you know the percentage of people who do that? And if it does seem like there's a lot of people who do not have taxes withheld, will that additional $600 end up being a big tax burden or a big payment burden come tax time next year?
Sure, this is Secretary Frostman. I did get bumped off the webinar. My computer rebooted mid-webinar, but back on. And so I don't have a good answer for you as far as the percentage. I know some folks do choose to have those taxes taken out, and these benefits are taxable. So whether it's a big tax burden, I don't know on a relative basis what that looks like, but both unemployment insurance, PUA, and the $600 per week are taxable. So I don't have a number, but I can follow up with the group if that would be helpful afterwards.
Yeah, absolutely. Thank you. I'll move on to another question. This one I'm going to aim at Scott Phillips with weda. What kind of documentation do borrowers need to present to verify that they are currently out of work or have a reduction of their income?
With COVID-19, if it's impacted by COVID-19, we do not require financial documents. We do not require anything written. It can be actually taken verbal.
Oh, okay. Great, thank you for that. And then I'm going to, this question came during your presentation, Rebecca McAtee, and this, I believe that it has to do with the food share benefits. So how does this work for the children who are eligible to receive free and reduced meals, but their parents don't currently receive food share benefits?
So there's a couple of different processes. So we are capturing children that are receiving free and reduced lunches that are not in our food share households. We have 3 different data sets that we're using to coordinate this. And so there is the first round of benefits went out for current food share recipients this weekend, but the weekend of May 9th, we're going to be running another round of benefits for individuals who may be on other programs. So either Medicaid, W-2, other programs, childcare that we have, their information available in our system. And then we also will have a simplified application for other families to go through. So more information will be forthcoming about that.
Very good, thanks. I have a question that that came in a couple different formats, and I'm going to go ahead and ask Janice Peters to maybe answer, but please feel free if this does not, fall under your programming, and we can seek out an answer for the Q&A document. But do you happen to know of, and anybody else can chime in if Janice feels like this isn't in her area, but do you know of any plans to assist people just coming out of the criminal justice system, or if there are programs that are not available to those people that are under probation or parole? Does anyone know if the qualifications will change with this COVID-19 crisis? So Janice, go ahead and see if this makes sense for you, and then if anybody else wants to chime in, please do.
I am not aware of any program changes or provisions that are specifically targeted towards individuals who are reentering the community, but that is not a reason for individuals to be ineligible for our program. So they may, whether they're reentering or not, it shouldn't affect their eligibility, and they should apply.
Very good. Anyone else? Okay, I have a few questions that are involving the digital divide that we have, especially thinking about people in rural places where the bandwidth for Wi-Fi and just being able to connect to the internet can be difficult. I think that I even have seen some questions and some comments come through where people even just trying to get on this webinar have had some difficulty, and a lot of times that can have to do with internet connections. So therefore, applying for some of these programs or getting through to some of the agencies can be tricky for a lot of people. I would like to, this is kind of an across-the-board question, but maybe I'll first just send it. Laura, if you have any suggestions or things to say for people who perhaps are experiencing difficulty because they do not have access to the internet, is there any kind of suggestion or resources that you can promote for people in that situation?
Well, in the Bureau of Consumer Protection, I can't think of anything off the top of my head. I might, and I can look at more resources and report back to you, Hallie. But I would say that our website has a toolkit for rural communities and outreach in the COVID crisis for rural communities. I also think the PSC is working in this area in terms of the lack of connectivity for folks in rural communities. So I can look to both of those places for further information on that issue.
Very good. And I think that there's probably a similar answer from all of the other agencies who are on the line right now. But as I mentioned, we're going to do our best to pull together all of the answers that I did not get to in the Q&A section. I feel like we can probably do a much better job pulling together all of the resources and the answers to these questions in a document than we can if we tried to push forward and answer them all today in this webinar anyways. So with that, I'm going to go ahead and promote a website that is put together by some of our colleagues at UW Extension, the UW-Madison Division of Extension. And this website has a lot of great resources for everyone who has questions about financial issues during this situation. And I would like to thank Peggy Olive and Jenny Abel for their assistance in organizing this webinar today. And as I mentioned, all of this information, slides, recording will be posted on our website, cfs.wisc.edu. I would like to thank everyone for joining. I would like to thank the presenters for taking the time out of your very busy schedules to share this incredibly valuable and vital information with our state practitioners and educators today. And thank you to our audience of practitioners and educators for tuning in. The work that you do is crucial for the well-being of Wisconsinites across our great state, and we thank you for your efforts in this very difficult time. Just a reminder, the recording will just take about one business day, and I will actually send it out to all of the people who registered for the webinar, so that should hit your inbox. Again, thank you to everyone, presenters and audience members alike. Please stay healthy, stay safe, and be well.